Well, blockbuster results coming in from TCS. In fact, Q3, which is a seasonally weak quarter, there in itself, TCS has reported best Q3 in 9 years. And no doubt, just before the results announcement itself, we did see TCS stock reaching record all-time high levels. In fact, TCS has stated that they have gone back to reporting positive growth on a YOY basis. Revenue growth in constant currency terms stood at 0.4% YOY in constant currency terms and at 4.1% quarter on quarter in constant currency terms. Management stated that they have seen broad-based revenue growth across verticals and also across geographies. Operating margin stood at 26.6%. This is the highest operating margin seen in the last 5 years, and this is despite management rolling out salary hikes from October of this year. If you look at the TCV of deal wins, that also stood fairly strong, and management is fairly confident in terms of the overall deal pipeline. TCV of deal wins stood at $6.8 billion. This does not include large deal win of Postbank Systems in Germany, according to the management. If you compare it on a sequential basis, last quarter we did see TCV of deal wins at 8.6%, and in the same quarter last year, TCV of deal wins stood at $6 billion. If you look at from a sector wise or vertical wise, BFSI reported the highest all-time TCV of deal wins, and North America reported the highest all-time high TCV, and both BFSI is the largest vertical for TCS and North America is the largest market for TCS. BFSI as well as the technology and services revenue have moved to positive territory on a YOY basis in constant currency terms. Management stated that they have achieved revenue parity on Q3 YOY basis as per target, and they have achieved margin parity of Q4 levels in Q3 itself. TCS also has reported an all-time low attrition rate of 7.6% LTM. Cash conversion rate remained very strong. Cash conversion rate came in at an all-time high according to the management. In fact, if you look at the USD growth, that is the USD revenue growth, it stood at 5702 million, which is a 5.1% QOQ. This is on the back of strong volume growth and also good amount of market share gains coming in from TCS. EBIT margin, as I said, has improved significantly. It is at a 5-year high at 26.6%. Shareholders' profit stood at 8701 crore, which is up 3.2% if you compare it with the adjusted profit of the last quarter. In fact, across the verticals, as I said, management has reported fairly strong revenue growth. BFSI grew 2% quarter on quarter. Manufacturing segment grew 7.1% quarter on quarter in constant currency terms. Life sciences and healthcare 5.2%. Retail and CPG, which again is a very important vertical, that has grown at 3.1% quarter on quarter in constant currency terms. In terms of the revenues also, North America, the largest market for them, grew at 3.3% quarter on quarter in constant currency terms, followed by UK, which grew at 4.5% quarter on quarter in constant currency terms. In fact, management, which is Rajesh Gopinathan, he is fairly bullish on TCS achieving double-digit revenue growth both for financial year as well as for the calendar year. He stated that confident we will get back to the double-digit revenue growth both for FY, which is financial year, and calendar year, and that they have achieved revenue parity on Q3 basis as per the target. He also mentioned that, and as I quote, growing demand for core transformation services and strong revenue conversion from earlier deals have driven a powerful momentum that helped us overcome seasonal headwinds and post one of our best performance in the December quarter. We are entering the new year on an optimistic note. Our market position is stronger than ever before, and our confidence reinforced by the continued strength in our order book as well as the deal pipeline. So yes, strong results coming in from TCS, and quite a few of the analysts have stated that there is the possibility that the price to earnings multiple itself expands for TCS, which is TCS re-rates. Currently it is trading at nearly around 30x 1 year forward PE.